Hey, what's good, everybody? Happy Thursday already. The week is just flying by. Look, hey, more excitement in the markets. I told you it was going to get more dramatic, more volatile as we get near this government shutdown. There's no way that they would just, simplify it, make it easy at the beginning of the week. They will always wait till the last minute. And here's the deal. So right now it's just a game. It has nothing to do with funding at this point, which is sad. It should have everything to do with the money that's being spent and where it's going to be spent for our government. But right now, you have Democrats not wanting to let up on their pressure because otherwise, if there's nothing to talk about, then the media is going to focus on how great tax reform is and all the companies that are doing good things, which of course was mainly done by Republicans. Well, Republicans don't want to let up either because they... number one, they don't want to give in to all these sort of things, but they also want to make it seem like the Democrats are responsible for the government shutdown. So again, I don't get into politics here, but I know enough to know that they're just playing games at this point. They're fighting for things that have nothing to do with what really matters. So expect more of that to continue before tomorrow comes to an end. That's the deadline, I believe, tomorrow at midnight. So let's get into the markets without going into too much of that garbage. Remember, hey, everything we talk about here today is not financial advice. You should always speak to a registered financial professional before making any investment decisions. Just use common sense. Any videos that we make or that we share with you on our website, it's just for educational purposes only. So, I have to say that. Okay, let's get started here. The Dow was down by 96, was down triple digits on the day. Let's take a closer look. I'll show you what we have here. There we go. Was actually finished down only by 96, which, whatever. It was down triple digits. It was able to do okay. It lost some of that in the last few minutes of the day. The S&P lost 1. The Nasdaq lost 2. Overall, kind of a back and forth day. What's important to note is the volatility of the day, or the trading range, the actual range that the stock market moved in. If we zoom in here on the Dow, it doesn't look very good. But basically you can see back and forth, right? This red candle just kind of illustrates the range for the day. The high and the low is what you're seeing there at the very top and at the very bottom. If we look at the S&P, it's a similar picture, just traded back and forth in a little bit wider of a range, not quite as wide as Tuesday, but, a little bit more, I like to say drama, a little more drama here up at the highs. So let's talk about some stocks that were affecting your retirement investments today. Walmart being one of them. Walmart shot to new highs. You can see it on the charts there. Brand spanking new highs. Goldman Sachs, no joke. When Goldman Sachs speaks, when they upgrade or downgrade a stock, everybody listens and pays attention. That's all that happened here today because Goldman Sachs raised their rating to the highest possible rating that they have for Walmart. Walmart investors got all excited. Basically, their comments were that they expect the mass market, which Walmart obviously, kind of dominates that mass market with Amazon. They expect that to be for them to benefit from stronger growth in that category because of tax reform and, the new money that's supposed to be in all of our pockets. Well, investors agreed as well. Sent the stock higher by about 2%. For the year, Walmart is up almost 6%. The year just started, right? So Walmart's doing well. Here's an interesting thing. There's a lot of stocks I could cover today, but I want to cover two in particular. Morgan Stanley, so obviously a big banking firm, a big name, we've all heard of them. They reported their earnings. Earnings and revenue came in better than expected. If you're not familiar with this, basically once a quarter, stocks will report their earnings. How did they do? And a lot of metrics that go inside of that. Basically, how are they performing as a company? They have to share that with the world. Morgan Stanley did that, and earnings and revenue came in better than expected. Here's the funny part, and you're seeing this with all of these big banks that have wealth management as a service. The real money that these guys are making is in wealth management. And I'm not going to say anything bad about wealth management or these as far as what they do. Great company, obviously, we're competitors, so it would, wouldn't be right if I said something bad about them. But they're making money from wealth management because the stock market's going higher, and all of those hidden fees that are inside of your portfolios, if you have them at Morgan Stanley, they're just collecting them. They're taking them in. And you don't notice because the stock market's headed higher every day. You're like, yeah, I made a little bit of money. You don't care. So 2 years ago, that's when everybody noticed that they were paying ridiculous fees. Companies like me did really well because we don't have ridiculous fees. Morgan Stanley, yet another bank to come out and say, wealth management was our strong point because of the fees that they charge. So the stock was up about 1% today. Morgan Stanley helped the financials today. But if we take a deeper look here, there's another bank, Bank of New York Mellon. There's the symbol. They suffered about a 4% decline today. They reported earnings didn't come in as great as expected. Basically, there's about a $320 million charge that they're going to have to pay thanks to tax reform. And so that hurt them. But they did also mention that their wealth management business was up 13%. Not the activity, but the actual revenues that they generate. So that just goes to show big companies like this that generate tons of money off your retirement accounts, they're doing well in that respect. So something to pay attention to. If you're interested in anything wealth management or retirement, I hope you check us out. Actually, we're trying to do things a little bit different, and hidden fees is not one of those games that we play. But here's the thing, because they lost about 4%, if we look at the financials in general, you could see the financials were flat. And that's basically because of these two names today. And remember what we learned yesterday, the banking stocks and the semiconductor stocks must be moving together in order for there to be a huge rally or a very strong, consistent move in the market. We didn't have that today. We had banking stocks that were flat because Morgan Stanley did well, but New York Mellon did not. And so they pulled each other apart. They're almost an equal weight in the financial space. So the other banks didn't really do anything. These two sort of playing tug of war caused the financial sector, which you see on the charts there, to basically do nothing today, down a fraction of a percent. So very interesting how really two stocks sort of held the markets back just a little bit. Of course, that's not it. There was also Boeing. Boeing came off of its highs today by quite a bit, 3%. So maybe a short-term top. And hey, if you're interested, I'll tell you real quick. I used to teach people all over the world about trading. I would trade live in front of them and do investing, all kinds of great stuff. And I taught clients in China and Israel and stuff. Here's something interesting. If you look on this chart, this is just the price movement day in and day out of Boeing. Stocks like to remain near this green line at the bottom. And it's not a magic line. It's not some magic thing that's going to make you a ton of money. But historically, stocks like to maintain a level close to their average, their 20 to 21 day average. And that's indicated by this green line. So if you go back in history, you can see anytime any stock gets too far above or below, people realize that it's either trading at a severe discount, or in the case of Boeing, maybe it's a little overpriced in the extremely short term. And so what you see is stocks tend to recover and move back towards that average. That makes perfect sense because think about it. If you're buying stocks, you want to make sure you don't pay an above average price. And if you see something below average, then you might think that's a discount and maybe that's a good deal. I don't know. So that's kind of why that works that way. A little bit of a side note, thought I'd point that out. Boeing being down by about 3% today is the reason, one of the main reasons actually, why the Dow suffered today and was unable to get back to positive. There are really two names, Boeing and General Electric, which have a pretty severe impact here on the Dow. Let's get General Electric. Also a horrible day. It's fallen off the charts, guys. You can't even see it on the screen. That's how bad they're doing. Down another 3% today to new lows. General Electric, we've talked about them all week. They've got some problems in the short term. I think they'll figure out how to split themselves up and kind of rebuild. Think of it as a football team in a rebuilding year, possibly a rebuilding 5 years, but they're working on it. So without getting into that, that's basically what we have to offer today. That's the stock market in a nutshell. A couple other names that stick out. Let me go over here to the S&P 500. You had just a few names like AES sticking out there. Not a big sort of impact on everything. Discovery Communications back in the news if you're interested in that. That's about it. I think the odd part of today, you never really saw gold come in and try to play along with or try to play against this move today. Gold was actually down a little bit. Oil had kind of an off day, not really much exciting to report there. Sort of the focus right now is on the broad markets because look, is the government going to shut down or not? This is a game they always play. The markets always respond this way leading up to the government shutdown. We can't control what they do. Just know in the short term, in particular tomorrow, you not only have options expiration. Yeah, tomorrow's options expiration for the people that trade options and use those in their portfolio, which can cause a little headache in the market, sometimes a little volatility. But you also have this government shutdown thing. What are they going to do? What's the big sort of solution to the problems here. I hope that it's not that they're just going to delay this decision by a month. And it seems, as of now, when I'm recording this, it seems like that's what they're probably shooting to do. So hopefully we can get something else done. Look, if you enjoyed this video, you might enjoy these 2 other videos as well. Feel free to check out our website if you're interested in anything retirement investing, or if you just want someone to help you with some financial help. We do that for our customers as well. Thank you so much for watching, and we'll talk to you soon.